Good morning and welcome to Morning Markets from True Potential. Today I just wanted to look at how equity markets in particular performed last week and then look forward to some of the data points that we'll be looking to over the week ahead. So last week, if we look back over the week, we started with a relatively weaker backdrop for equity markets over the course of last week. However, as we moved through the week, we started to see a slightly better trend of performance. And indeed, if we look at the S&P 500 in the US, we finished marginally lower on the week after a relatively strong finish on Friday. A large part of last week has certainly been driven by the ongoing corporate results that we're hearing from US companies and the trends that they're discussing there in terms of some of the challenges they face, but also some of the opportunities that they're seeing. If we also just look back over the course of the week and indeed over the past couple of weeks, the other factor that we have observed in markets has just been this move higher in the oil price. Brent crude ended last week around $87 a barrel, up around 14% from the low that it hit at the beginning of December. In large part, that's being attributed to a slight improvement in sentiment as we have seen China reopening. China's oil demand is very material into the global oil market. And indeed, last week, OPEC discussed the reopening of China and the impact that that could have on oil demand. If we think about oil demand typically being in the region of 98 to 100 million barrels per day, OPEC were suggesting that the reopening of China could add an incremental 2.2 million barrels per day of demand, so around 2% incremental demand coming through as China reopens. Other things last week, we ended up the week with a number of Federal Reserve governors speaking and just setting out their views on interest rates in the US economy. That was important because we'll not hear from anyone else ahead of the Federal Reserve meeting at the end of this month. And that, I suppose, what did we hear? Yes, a slowdown in the pace of interest rate increases, probably thinking now around 0.25%. Remember, last time the Fed met, it was a 0.5% increase. So just looking to the week ahead then, a couple of things that we'll be focusing in on as a team. Firstly, we'll certainly see a ramp up in the number of companies discussing their performance in the final quarter of 2022. But really the thing that we're all most interested in is the guidance that companies provide for the year ahead. What are they seeing in terms of the demand environment? What are they seeing from a margin perspective? And how does that impact their earnings expectations? We also have fourth quarter GDP numbers in the US, which is expected to show a degree of a slowdown from that of the third quarter, but still in positive territory. In Europe, we'll hear a number of the Purchasing Manager Index reports, and that'll be important because sentiment certainly has improved in Europe over recent weeks, and it'll be interesting to see if that has translated into some of that survey evidence, and we'll get that as we go through the week. We also have that in the UK. Unfortunately, it's not expected that we would see an improvement in PMI numbers for the UK at this point. Over to Asia, it'll probably be a very quiet week with the Chinese New Year and a number of market holidays as we look to the week ahead. So relatively quiet from Asia. So this week, much more focused on Europe and the US. I'll leave it there, but please do join us again tomorrow. Many thanks. If you're interested in taking your investing to the next level or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.